With the 5th of April deadline approaching, you may be asking yourself, is now a good time to invest in a stocks and shares ISA? Moneyfarm thinks it is, and here's why. Markets are expected to do much better over the next 10 years. Put simply, our outlook for potential returns for your investments have never been better. For example, if you invest in equities for the long term, we predict an average return of 8% per year for the next 10 years, which is a remarkable improvement from previous years. What's more, fixed income investments are predicted to produce the highest expected returns since we began tracking them in 2014. History shows us that there are more good times than bad. During a downturn or a bear market, it could be tempting to panic and sell off your investments. However, historical data from 1950 to 2022 shows us that this is unlikely to be the best course of action. In fact, after a market correction, the median one-year performance is 30%, while after a bear market, it is a median of 37%. This performance then normalizes in 3 years to a median of 18 and 20% respectively. That's why it is crucial not to miss out on the rebound. You could beat inflation through compounding. With current levels of inflation, your capital could lose over 10% of its purchasing power within the next year. Even if you assume a 2% inflation rate, which is the Bank of England's target, your capital could still lose a further 15% or more of its purchasing power in the next 10 years. For example, if you have £100,000 in the bank, its real value could decrease to less than £75,000 in a decade if it's just kept in a cash account. With the right investment strategy, and by taking advantage of compounding, you could potentially earn returns that outpace inflation and help secure your financial future. You can maximise your tax allowances following tax increases. The changes are coming and several allowances will be cut, potentially resulting in increased taxes for many people. To optimise your tax position, it's important to take advantage of your available tax-free investment options. From next year, your capital gains tax allowance, or CGT allowance, will be cut from £12,300 to £6,000 in April, before being halved again to £3,000 from April 2024. By using your ISA and pension allowance now, you could potentially take advantage of tax-free investing and potentially see significant returns in the future. You could invest in the new wave of technological innovation. In the past 10 years, tech companies like Apple, Google, and Meta have revolutionized society with their products, and in turn have generated significant wealth for early investors. Today, we're seeing a surge of new investments in emerging technologies, presenting unique opportunities to ride the next wave of tech innovation. To help investors capitalize on this mega trend, we've recently introduced new thematic portfolios targeting breakthrough technology and innovation. Thematics also invest in trends associated with societal changes and in services and products that will help to save our environment. So the earlier you invest, the more of a difference you could make to not only your savings, but to others as well. You can take advantage of Moneyfarm's cashback deal. By investing now, you can take advantage of Moneyfarm's current cashback offering. You can get up to £750 in cashback, depending on how much you invest with us. The offer ends this year on the 30th of April. If you want to know more about this offer and how it works, see our website for the terms and conditions. In conclusion, there's been a lot of talk about a recession, but fear of a recession shouldn't keep you out the market. While market downturns can sometimes come before recessions, it's also true that market rallies can happen during economic downturns in anticipation of a recovery. Now, avoiding markets during these times can have a negative impact on your financial outcomes for many years to come. So investing now can be hugely beneficial. For further information, please contact us through the app or call us on 0800 433 4574. Thank you.